This problem is very similar to exercise 3-2A. Again, the numbers are going to be different, but the approach is going to be exactly the same. So let's walk through it together. Here they give us information for two different companies. We have a service-based company, that is Hopkins CPAs, and then we also have a merchandising business, which is the sports clothing company. So we're going to start by focusing on Hopkins CPA. Okay, they give us three different transactions here. And we are going to prepare the income statement, the balance sheet, and the statement of cash flow. Now, it's important to note that all three of these transactions are not necessarily going to be used on every single tab. Okay, we're just going to use what we need. So let's start with the income statement. We know that on the income statement, we are only concerned with revenues and expenses. That's it. That's all we're going to include here. Okay. So our revenue amount is going to be the amount that's listed right here as our services that we provided to clients. So whatever amount you see listed right here, that's the amount of your service revenue. Okay. In this case, our only expenses for the CPA firm is going to be the salaries expense. It is going to be whatever you see listed here. So that's going to be your salary expense. We can then take service revenue minus salary expense, and then we arrive at net income. Okay, now we're going to hop over and we are going to complete the balance sheet for Hopkins. Okay, now there are some of these that we are going to need to do some calculations on, and I'll show you how to do the calculations in just a moment. All right. But first, we can start here. Borrowed $108,000 from the bank to start a business. That is going to be the amount of your note payable. Note payable is going to be whatever you see here that was borrowed to begin the business. Okay. Now, let's go up and let's look at cash and accounts receivable. Okay, because both of these are going to have to be calculated. Okay. Accounts receivable is going to be pretty easy to calculate. The amount of accounts receivable is going to be the difference between the amount of services that we provided and the amount of cash that we collected. Okay, so in this example, we provided services of $72,000, but only collected cash of $60,000, meaning that the customers still owe us the $12,000 difference. Okay. So your accounts receivable is whatever the difference is between the services provided to clients and the cash collected. All right. Cash is going to be a little bit more difficult to calculate, and I've got a spreadsheet here that I'm going to pop up for you where we're going to see how you will calculate your cash balance. All right. You're going to start with a positive amount, which is the amount that was borrowed from the bank. Okay, because that $108,000 cash came into the business. Okay, and then you are going to add $60,000. That is the amount of cash that was collected from the customers. And then you're going to subtract the $38,400 because that's the amount of salary expense that was paid to the employees. So $108,000 plus $60,000 minus $38,400. In this case, that gives us $129,600, and that is what we see here. Okay, so again, you can use the numbers that you see here, okay, to plug in place of the numbers that we have here, and that will allow you to compute the cash balance. Now, retained earnings, let's hop back over here real quick to the income statement, and you're going to see that that's our net income amount. Okay, because this is the first year of business for the company, they don't have a beginning retained earnings balance, so their retained earnings is just going to be what we have recorded in net income. So this should be your balance sheet for Hopkins CPAs. Our only assets are cash and accounts receivable. We just computed those. You can then calculate total assets. Liabilities are going to be notes payable. And then the stockholders' equity, the only piece we have there is the retained earnings, which represents the net income of $33,600. When you add your liabilities and equity together, you can see that total liabilities and stockholders' equity will be equal to total assets. So let's hop over here and put together the statement of cash flow for Hopkins, and then we'll be ready to move on to the sports clothing company. Okay, for Hopkins, all right, cash inflow from clients. This is whatever amount you see listed here in your problem. Okay, whatever amount we collected from customers, that's what we got from our clients. Cash outflows for salaries, that's given. It's whatever they tell you that you paid for salary expense. And that allows us to compute our net cash flow from operating activities. Okay. Once again, we do not have any investing activities. These would be activities related to long-term investments or property, plant, and equipment. We don't have any in this case. We do have a financing activity because we have some long-term debt. The cash inflow from the loan, which was $108,000, and again, they give us that right here in the problem. And so that allows us to calculate our net cash flow from financing activities. And that gives us 108. We add all of this together and we get a net increase in cash of 129,600. 129,600 is the ending cash balance, and whatever you have here for your ending cash balance should tie to what you computed here for the cash balance. And remember, we used our little Excel spreadsheet to make that calculation. All right, so that's Hopkins. So let's hop over here to the sports company, okay? Now, for this one, we're going to use the information here on this second section. They also borrowed $108,000 to start their business. Because this is a merchandising company, they have inventories. So they bought $72,000 of inventory, and then they sold inventory that cost them $31,200. They sold it for $60,000. Hint, that's the amount of your revenue. And then they paid some operating expenses of $9,600. So first thing we're going to do is put together the income statement. Okay, remember, on the income statement, we are only interested in revenues and expenses. That's it. Sales revenue, this is going to be the amount that we sold to customers. That is our revenue. Okay, so whatever you have here sold to customers, in this case, we've got sold for $60,000. That's the amount of the sales revenue. Okay, cost of goods sold, that's the amount right here. Okay, on the same line item, it's the first amount that was given. It tells you what the inventory cost. That's your cost of goods sold. Gross margin is going to be sales revenue less cost of goods sold. Okay, and then you subtract operating expenses, and they gave that to us as well at $9,600. Subtract that, and you should come up with your net income amount. Okay, now remember, just like we did for Hopkins, that net income amount is what we're going to use for retained earnings when we hop over here to the balance sheet. Okay, so there we go. There is our retained earnings. We just carried that over from the income statement. That's our net income. Notes payable, again, is just the $108,000 that they gave us. In this case, we are going to have to calculate the amount of cash and merchandise inventory, and I have those calculations over here for you. Okay, for cash, the company started with $108,000. We have a negative $72,000 because they paid cash for inventories. They then sold inventory for cash, so we've got a plus 60 here. And then we've got our operating expenses that they paid cash for. In this case, it was $9,600, but we are able to sum those together, and we come up with an ending cash balance. In this case, it's $86,400. Okay. Again, you'll use the exact same approach that I used. You're just going to plug in the numbers that you have in your problem for each of these respective spots. Okay. For inventory, all right. We purchased $72,000 in inventory, and we sold $31,200 worth of inventory. So what we have left in inventory is what we didn't sell. It's the difference between those two. In this case, it's $40,800. Okay, so again, you're going to use the exact same approach, plugging in the numbers that you have. Last thing, we're going to hop over here and do our statement of cash flow. All right, our cash inflow from customers, $60,000, okay? That's where we collected the $60,000 cash from our customers. Cash outflow for inventory, that's where we purchased the $72,000 in inventory. Cash outflow for expenses, $9,600, that's our operating expenses. Okay, again, we do not have any investing activities, and our only financing activity is the $108,000 loan. We put that here in the financing activities. We get our total for operating activities and financing activities. We net those together, and we come up with an ending cash balance that, again, should tie back to that ending cash balance that we computed over here on the balance sheet, and in this case, it does. So that's a good way for you to double check your work and make sure that your calculations tie out.